Greetings, everybody. This is Jeff Scott. This is my top-down review for May 15th, 2021. The title today, did a broad-based rally on Friday, signal all clear for the bulls, and I do point out there is a question mark. It is a question and not a statement. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. Okay. So first, the disclaimer. As always, it's for educational purposes only. Any recommendation should be considered just education and not investment advice. I am a doctor, not a broker. I have none of the licenses that would allow me to even tell you or advise you on what to do. I am independent. I pay for my own tools, and trading involves risk, and you alone are solely responsible for any decisions you make. Quick, before I go in, I just want to show something because I had a few people ask me about it. If you are watching a video on YouTube, and even though that's Market Smith, that's me. Okay, this is just, I think, the one from last week. Couple of requests. First of all, if I highlight this gear and I hit left click on the mouse, I have the ability of adjusting the quality. I record these in 4K. If you watch this in 480K, you will not be able to see anything of what I'm talking about. It used to default to the highest resolution that you could do. It doesn't always. Please make that change when you're watching these. The second thing is, if you like what I'm doing, please hit the thumbs up. If not, hit the thumbs down. And I always welcome comments. Now, under Show More, I usually have a link if you wanted to download the video. It comes from my Dropbox. So I just wanted to show you that. I talk about it every time, and I think some people don't realize about the resolution change. And by the way, if you don't like watching this for an hour, you can go to playback sound and watch it in 30 minutes or whatever time frame you want. It just makes me sound like a chipmunk if you go too fast. But I do this slow enough that you probably can speed it up, and somebody pointed that out to me last week, so thank you. I don't really spend much time on this anymore, just to call out. I've learned from a lot of smart people. They are represented here. Some have been teachers from the front of the room, Ian Woodward. Some have been teachers, authors, indicator builders like John Person, and you probably recognize most of the other people here. I own a lot of tools. I close my desktop as much as I can so you don't get stuck, figure out what products I've owned and bought. But I live in TradeStation, Thinkorswim, and I try and do the same thing in each of them. John Person's indicators, Dr. K's, Sagar's in TradeStation and Metastock. I use HGSI for most of my analysis, as you're going to see tonight. Certainly for end-of-day chart reviewing, it's the best thing I got. EdgeRater supplements HGSI. And then every once in a while, I'll mention another product to you. Just to keep in mind, I don't get paid if you buy something. And I'm an unpaid volunteer in every way, and this is just what it is, free education. Here's the website for highgrowstock.com, totally unaffiliated with me, except if you go under investing strategies, you'll see a bunch of movies that I've done over the last couple of years, free 30-day trial, no credit card required. Where are we? Where are we? You know, it's really easy when you historically look back at March 23rd of 2020, we were decimated. And then we came roaring out with the big cap techs leading. Throw darts, buy everything, you probably made money. Eventually, we're going to roll over, and it's going to be a real rollover, maybe a bear market. We've had them. And then it's throwing darts and shorting or buying contra ETFs, and you can make money. But when you have the S&Ps and the Dow Jones behaving one way, the NASDAQ another way, and then the Russell its own way, add to that the commodities, the dollar, this is a tough market. So where are we? It feels like we're close to a top, but we may have another leg up. That's my impression. Since I think we're close to a top, I'm not going all in, even though I think the market is poised to go higher here. I will continue to put hedges on and off based upon my own personal risk. I will have less positions, and I will not do things like the Scott synthetic when I think the market's at risk. When I think the market's falling over, I can do Scott synthetics to the short side. If you're new to me, a Scott synthetic is simple. A Scott synthetic is a low risk synthetic position where you buy a long call and you finance it by selling a short or selling a put, so shorting a put, and then buying back an out of the money put so you don't have unlimited losses. I don't do a lot of shorting puts in a tough, choppy market. Now, if you're convinced the market's going higher here, it's a great time to sell premium, but it's got to be on short term because you're going to get fat premiums because of the concern of the market. Friday sector review, not anywhere to hide for the bears. About the only thing that was mixed was healthcare. And healthcare is a lot of different entities within one. Biotech, retail pharmacies, drug distributors, hospitals, insurance companies. So sometimes you can see a good day for a couple of those, yet the rest are red. Other than that, what a super strong day. And you could see the indexes, at least the futures, did very well. More about that to come. Let's look at the major markets. And for this, I like to look at it in Thinkorswim. And let's just go ahead and maximize. So if you've been watching me, I've been talking about the sideways movement that occurred over a month ago, and we've really gone nowhere. In fact, we did sell off this week, and on Thursday we tapped the 50-day simple moving average and we reversed. This is on the S&P 500. On Wednesday we actually came down and hit it. Thursday was a reversal day. Where we closed is in the same area that we've been in. So the question is, are we about to start a new leg up? Wouldn't that be awesome? If we do, does anybody think we get much higher than this 42.38 prior high? I'm questioning that. I don't expect a big run. And where would targets be? 43.64 is the next fib retracement. So 43.60. So what do I expect to happen based upon this chart? I'm not convinced it's going to take out that prior high. But I do think the momentum is probably to continue higher this week. But I do think, well, I'll wait and let this market blow up and go beyond this 43.64 before I get real excited. But if I had to bet, we touch the 50, we reverse. We touch the 50, we reverse. 50 reversal, 50 reversal, 50 reversals, even when we cut through. We've touched the 50, broke back above it. History says we probably go higher. Those are the S&P futures, NASDAQ futures. Back up to the 50. Now again, look at the NASDAQ. I mean, you could almost draw a box going all the way back to the middle of February. And we are still living within the February high and the March low box. Sideways move, what do I think is? We're at the lower part of the box. Good chance we go higher, and I'll show you more reason for that. But again, we've got the 50-day right at where we're at, 17 above it, so not nearly as powerful looking as the S&P futures. Dow futures, a lot like the S&P. We have a new high this week, 1, 2, 3, on Monday, shooting star reversal. Tuesday had a John Person sell signal, traded down, and Thursday pegged the 50 and bounced. If I was a guessing man, you don't usually bounce off the 50 2 days. You get a much bigger move. So ask me what I think is going to happen. I think we can run up and maybe threaten this 3,500 high, 35,000 high rather, on the Dow futures. Russell, broken record. We are going sideways move. Sideways move, high of 23.68, low about 20.80. We're right in the middle of the range. The momentum looks like it's going higher, but unlike the others, it's got both the 17 and 50 right above them, which could be some resistance. Let's take a look at the VIX. Yeah, the VIX tried to run up this week, and if you remember, Monday, Tuesday, and Wednesday were painful if you were long, unless you were in all the right groups. I was not. And then Thursday and Friday were awesome, and the VIX came right back down to that 19 level, sort of where it's been. I would say no signal there suggesting a market collapse is imminent. And then the dollar, and it's interesting, it's pretty clear to me that on days the dollar is strong, the market sells off. Now, part of that is commodities might be leading this market, but that relationship is important. And I know that small stocks especially don't like a strong dollar, neither do metals. All right, if we look at the weekly charts, not going to say much here except to say look at how far we've come. The VIX doing nothing, and the dollar in the lower part of its range. Now, a lot of you know that I've become interested in this expected move, and I was just watching a video on Tasty Trade where their data scientists talked about what to expect. And they did a study going back multiple years, looking at the S&P 500 and the major indices, and also looking at the stock components. And they found that stocks remain within the expected move from 79 to 83% of the time. Now, as I understand, the one standard deviation move is 68%. So why would they be within it much more than that? Probably because they're wider than one standard deviation. Perhaps since they're set really by the option premium setters and option market makers, and they're thinking that they're selling the expected move, that you have to have a pretty substantial move to get beyond them. And by making it less than or greater than 68% chance they stay within, they're improving their odds. This was kind of a reversion to the mean week. So let's set the bar. Here is the prior week and the week before that 2 weeks ago. And notice in the E-minis, the prices ran flat for 10 days in a row with very little variation. Moved up last Friday, a week ago. This was the expected range. So if you were an option maker and you sold a straddle, as long as the price closed within the upper and lower bar, you made money. So option makers, or the people selling the straddles, were pretty happy. Now on that Friday, it bounced up a little bit. It closed here, well within the range of the expected move. And then on this week, the expected move starts with this white line is the close on the prior week. This was the expected move. It looks a lot less volatile than the prior couple of weeks. But most importantly, we sold down on Monday, on Tuesday, Wednesday, a hard break. And I'll show you an email I shared with somebody on this when I started lightening up my shorts. Why? Because if we're supposed to be in there 83% of the time, odds are we're going back. On Thursday, we had a positive day, still well below the expected range. And look at this, on Friday we closed on the lower bar. So we closed within the expected range. I don't think that's magic. I'm not saying it's manipulation. I think there's reversion to the mean, and it closed right where the straddle was priced. Interesting. Next week looks like more volatility might be predicted with a wider range. We do have FOMC minutes coming in. So this was the S&P. About the NASDAQ, similar picture. Here was it starting, sold off on Monday, again on Tuesday, sort of a gravestone doji. Horrible day on Wednesday, selling at the lows. And now we are getting way beyond at least 2 standard deviations below, or approaching 2 standard deviations. And so I'll show you on the major moving averages that this was right down to the 50. Now, in fact, we could probably even add that, couldn't we? make that 50. Is this weekly? Huh. Was it 200? Oh, this is the NASDAQ. Okay, my bad. Broke through the 50. We'll look at it on the daily charts. I think I was thinking of the E-minis. No worries. Let's put the 200 on. All right, so we pull back. Gravestone Doji on Tuesday. Wednesday closed near the low, getting way extended below the lower limit of the expected move. Positive day on Thursday, and where did we close Friday? Just below the bottom of the expected move. So we had a reversion back to the mean. All right. Take a look at the Dow futures. Here was your bearish divergence, signaled by Dr. K's indicator, followed by John Person's sell signal, and the market sold off. Rallied up Monday morning, suckered some people in, and sold off Monday, Tuesday, and Wednesday, reversed Thursday, and actually took out the bottom of the expected range on Friday. If we look at the Russell, same story, sold off, took out the bottom on Friday. The VIX traded up and came back down and closed within on Friday. And lastly, oopsie daisy, not what I wanted to do. Let's bring that back. Lastly, the dollar, same thing. Trade up to the top and came right back down to the midline. So even though it was kind of a volatile week, you had mean reversion on Friday. Rates rose a bit, but they're well off their highs. In fact, they look like they're starting to go sideways. And I don't think it was the amount of rates that spooked the market. I think it was this rise almost vertical. AD lines, they rolled over a bit this week, but if you look at the large caps, they were at a new high, and the small caps have the divergence there. So the large caps are leading. If I look at the NYSE, AD line also rolled over, as did each of the major market ETFs, and no surprise with rates rising, even TLT dropped. Breadth, stocks above the 200, stocks above the 40 have both come down, and the short 13-day or 13-week or 3-month new high, new low actually turned down as well. Still at the top of the range, but some of the froth has burned off. Daily McClellan, we don't have new highs, so I'm not going to say much, but we've continued to hit new highs on the S&P. We'll see when we do it again without matching that on the oscillator, the summation index. So clearly we have divergence. On the weekly, the same thing. If we look at the state of the market, looking at the buckets, you can see that 61%, or not quite 2/3, but majority of the stocks are trading above the midline of their Bollinger Bands, and we don't really have an overextension either way, with only 6% above their bands. If I look at the Hindenburg Omen, which would be a signal of a market correction that might be coming, we don't see one on either side. I'm really scratching my head. We did have one on either Wednesday or Thursday in HGSI. We did get some new lows that were impressive, moving up off the bottom on the NASDAQ, but that shouldn't have caused the HINDY on HGSI. So I struggle with why. I think there's a number of reasons. HGSI uses its own indexes and may have different components. I think they're using bar chart now, and perhaps the calculation in one might be different. Is it 52-week highs? Is it all-time highs, et cetera, et cetera? But I am troubled a bit, like it's not reproducible when it used to be in the past. Market tone, well, we went from green to a bunch of reds, and we had 2 rounds of kahunas on Thursday and Friday to the upside, but all they did was switch us to neutral. Whereas the growth on the week, you could see that there really was no growth benefit. The market was negative for the most part, minus 2%. And if you look at drivers, the higher the earnings rank, the worse it did. The higher the relative strength, the worse it did. The better the group, almost the worst it did. Stocks distributing the week before continued to do poorly. Stocks that were better last week did better, but also negative. So it was sort of an ugly week. The S&P was down 1.31%. It's hard for this to actually be accurate because I'm short the triple Qs. There's no way for the HGSI to know that I'm short. It says I was down 3%. I got close to break even by the end of the day on Friday. My buy watch list, which didn't have any of those ETFs on, was minus 1.5. Filtered buys was minus 1.38. If I go down here, the IBD 50, the weekend review, the watch list from IBD Live, Mike Scott's list, all demonstrating that growth stocks had a bad week, all down about 3%. So bad week for growth, sector strength mixed. And if we look at the Q tools, which is just a great way of intraday after the market, do it in some top-down review, not a charting platform. So I still have HGSI. But what I see is that over 5 days, you could see that a lot of red on sectors, industry, and stock clearly improved the last 2 days. On the 5-day week, only 2 sectors were up. And if we look in red, what were those sectors? They were financials and staples, 2 defensive sectors. And when they say they're up, but they're up just a teeny bit. If we look at Friday itself, number 1 was energy. And interestingly, energy rebound after over a longer period, it's fine, but over the last, on Thursday, I believe it was very weak, and then it became the number 1 group again. We've seen this over and over for energy to take quick dives. But energy over the last year, 12 months, more up than down. You can see over the last year, all sectors are up. And even on yesterday, all sectors were up, although on the week I said 2 out of 11. Discretionary technology brought up the top 3. They're highlighted because in the Q tool, I can highlight what I want and hit the gears. And then all the groups in these different sectors will come up. And then I can highlight which ones I want. So I took all of them in the top 7. And you could see there's 147 industry groups. On Friday, 142 were positive. On Thursday, 146 were positive. And this is some of the strongest groups. And if I hit this, I get a list of all the stocks there. And then if I hit these 3 stars, I get a list of undervalued stocks with positive earnings. And these came up, and I focused on TNL. And in fact, I then took TNL, which is Travel and Leisure Company, put it into the Q Vital tool. The previous one was the Q Edge tool. And it looks at an extended industry group. Now, the Edge is limited to the S&P 1500. This tool will look beyond that. And then they came up with these stocks that would be in similar industries or the exact industry. It tells me what group it was in, industry, alternate industry. It's in the cyclicals. It shows me price and volume. Next earnings are not to July. It pays a small dividend. 1.81 for interest is much better than your money pays in the bank. What's interesting, the blue here being in the high 90s is very undervalued with high likelihood of a short squeeze. You could see in this list, 96% of them were up on Friday, and this is the most recent quarter growth. So travel and leisure looked interesting, and just for the sake of showing you TNL, if I bring up some of my tools, let's just dump it in here. TNL, what do you see? You see a stock that had a new person buy signal coming on Friday, broke a descending trend line, sort of in a flag perhaps, a new Dr. K LRSI. This is a John Carter compound breakout tool signaling, coming out of a squeeze with a PSAR reversal and a pocket pivot. Actually, not yet a PSAR reversal. And then a kahuna force, which means a force was positive and there was a kahuna. So this is TNL. I like to look at it in Q as well. And let me fix the size on this. There we go. And what you can see is that big tail on the weekly, although that's not a bullish color, sideways with a big tail, a breakout here. I think this is an interesting stock. My only concern is it's up here might be considered resistance, but I think TNL looks interesting. Now, back to the show. Canaries in the coal mine. These are the list up here. Yes, I know Priceline is now bookings. Like so many other things, it came down and hit the 200-day moving average and maybe is reversed. Know your news and earnings. News becomes more and more important at this point of this market rally. The thing starts on Tuesday will be important. FOMC minutes on Wednesday will be very important. Jobless claims, manufacturing, leading indicators on Thursday, and then PMI on Friday. These are confusing times. This could be a period of time where good is bad, meaning if things overperform, the Fed might be more likely to act sooner, and bad is good. If things look bad, then the Fed is likely to stay on its weight policy. Lots of earnings this week. You can always hit pause and see this, or you can go to the site earningswhispers.com. And as I say here, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So, very wordy. First one basically says Friday was good. Second one says the week was bad. There was negative momentum in growth stocks, rotation out of growth, and hot CPI on Wednesday. All this hurt the market, yet the market responded to a dovish tone from the Fed, and it was a buy the dip on Thursday and Friday. Interestingly, what started off the year very strong is still great on the Russell, the Dow, and the S&P, but I'm a NASDAQ for the most part guy in growth stocks, and the NASDAQ is only up 4.2% on the year. As I said on the video last week, I had lots of hedges on. On Wednesday, I sold triple Qs and diamond shorts. I sold some of my calls on SPXS. I've held on to my Amazon puts for the most part. I sold my Apple puts, or yes, like they're puts, not shorts, same thing. I lost a bit on the week. I would have lost a lot more without my hedges. So I'm still long. I have a couple hedges on. When I looked at seasonality, I saw a lot more positive than negative over the next couple of weeks. So I wouldn't be surprised to see a little bit more strength over the short term. On my weekly buys list, you're going to see lots of recovery plays. Some of the commodity trades have run a long time, so I started taking profits. I still own, as you can see, FCX Tech, Nucor, US Steel. I've got some gold, got some silver ETFs. If the dollar starts to pick up, I'll probably unload some of them. Now, I watch futures, and I watch futures for a reason. I watch futures because they give me a clue as to where the market is going. So Brian, without mentioning last name, is somebody who I've conversed with a few times. I think he bought one of my computers, and he had emailed me about during the day on Wednesday, sell in May in full force. And I didn't have a chance to respond until the end of the day. So at the end of the day, on Wednesday, I saw this very ugly red candle. But if you had Sagar's tools, you would know that this represents sort of a resistance boundary, and it has an uncanny ability to show tops and bottoms. So we had run right through that. So that told me we've already overextended to the downside. Bad place to be shorting. Another thing I saw is on the Sager's auto-generated trend lines. We're sort of in a wedge, and it looked like we were pulling into the bottom of the wedge. I'd rather be buying it here and selling it here, then vice versa. Then on Thursday, we had a strong candle. And on Friday, we had, I think that's a stretch, which is a bullish signal, and we broke up. The problem here, I think is pretty obvious. If this is truly a wedge, I would expect it to run up here and be worried it's coming back down. Now, it's going to break soon. We're getting near the apex. So what did I respond? This is Wednesday night. I covered some of my triple Qs, Apple and Diamond shorts at the close. We are near some support, especially on the NASDAQ. Then this is something we all have to be very aware of. Bear market rallies can be ferocious. It is very possible that we run up to this red line, come back down and break and continue falling. We are not clearly out of the woods. I still think more pain to come, but would not be surprised to see some respite in selling in the next few days. So I kept my Amazon puts because I need them because it keeps my margin at a nice level. I think that I just told you what I think is going to happen. I think the market goes higher. I'm still worried about more volatility coming in. All right. And I respond to emails within reason. If I'm working it, usually it's like this at the end of the day. Let's take a quick look in TradeStation. Okay, I do this on a regular basis because I glean information that I use. I look at a combination of Dr. K's, John Person, elders, indicators, and then the Hgsi stuff, and I get my impression of what the market is likely to do. I'll be the first to say that this stuff works best at extremes. When you're in the middle, nothing works great, especially if you're trending. But if you want to know when to reverse a position, some of these things can be very helpful. So, other thing I want to tell you is the signals will vary just a bit. They could be a day or two off between TradeStation, Thinkorswim, Trade Genesis, or Trade Navigator from Genesis, and Hgsi. They all have different math. It's the same signal, but the different programs may have different tools that are used to generate them. So I start with number one. Am I in a buy, sell, or a sell? Trying to understand whether we're roaring bull or this market still has risk. We are in a daily sell. We're in a weekly buy. We're in a monthly buy. Daily sell, it's bothersome. But after Friday, I would expect that to revert if we could go up any higher on Monday. Number two, what's the color of the paint bar? When it's green, I should be buying or holding. I shouldn't go short. When it's red, I should be short or holding. I shouldn't go long. And when it's blue, it's neutral. I can do whatever I want. So it turned green. That's actually positive. All right. I suppose if I check this Monday, if it's up 30, 40 points in the middle of the day, I'll have a new buy signal here. Next thing I look at are these red dots. These red dots tell me we probably have some MACD divergence. The red dots ultimately will end in a sell-off, but we can go months as we have here, so I'm not going to make a big deal of them. This purple thing here, magenta thing, which is seen here, is a Laguerre RSI that fires when there's potential for some weakness in the market. So that's another negative, but it's 5 days ago, and this may be the reversal here. I look at the weekly bongo has remained green. That tells me that in the long term we continue in an uptrend on both a weekly and a monthly candle. And if I look at the high jump bar at 62%, I'm not at risk of an extended mean reversion reversal. So I put that all together, and I'm hopeful that it's going higher. And let's look at the Dow futures. Looks identical, so I'm not going to say anything more. Hopeful that it's going higher. These two have clearly been the leader. I can look at the NASDAQ futures. Now this looks like a reversal starting, but look over here, the weekly sell signal on the NASDAQ. when we get them, the market usually sells off. Now, that's got to be concerning. And then last, the Russell. A new buy signal came in on the Russell. The Russell's the one that's the weakest right now. So I put all that together, and I'm thinking bear market rally, but this could still go on further, but I'm expecting lower lows. That is my guesstimate. All it is a guess. No one knows the future. I've seen enough here that I left some of my hedges on, and I'll be quick to move one way or the other based upon what happens Monday. As I said before, it would not surprise me to see this market run up a little bit more, but I do think, and I remain thinking, we are closer to a top being a process, than we are to a bottom, as we saw last March. And a bottom, just going back to March here, and a bottom was an event, almost like here was a V. This is the Russell, which was the weakest. If you look at the NASDAQ, I hate when that does that. We didn't realize it was a bottom until we were probably up here, but that was a sharp reversal. I think we're closer to a top, and I'm looking more for a reversal to the downside. So I do think we might have some more upside short term, but I'm not betting that this is a new bull market starting by any means. The dollar, you notice the green dots here? We're in a daily sell and a weekly sell, not quite a monthly sell. Red, so bearish. But these green dots tell me that the MACD has gotten less negative as the dollar has gotten weaker. That signals risk of a bounce in the dollar. Now, what did I want it to do here? I wanted to do something. So during the day, I like running this. And I could look at the futures, or I could put on the ETF. So I can go either way. They're very similar. When I look at the spider, I see the spider sort of in a range. And you can see that boundary I talked about right here, and the boundary right here. Those are auto-plotted by the Q tools. We traded up to it. We traded down to it. We're in the middle. I feel like it's going higher, as I said, but I don't think it's going to break out above the 430, 435 range. Still, that's a 4% move from here. The Qs are in a wedge, so I expect it to move up, touch this, and probably reverse. Now, if the Qs will actually break out of this, that would be actually very exciting. We are at the bottom of the trading range, and then you might see a run up to 350, which would be almost an 8% move from here. You look at the Dow, very much like the S&P, ran up the upper boundary, came down and reversed. How much further do I expect it to go than this boundary? And then the Russell, where potentially we run right up to this line, this trend line resistance. So it's interesting how the SPY and the diamond almost look identical to me. That the Q looks intermediate in the trading range here, and I expect it to eventually break above or below, and the Russell's below resistance, and it's just going to run up there and probably fail like it did here, and that's how I watch the market. And then during the day, I'll put on the futures. I'll knock on the 15-minute, and I'll watch this all day long. And you could see now they all look alike, that they're all in an upward trend signal, and they're all coming into an area here of potential resistance. So I think you can learn a lot from the futures, even if you don't trade the futures, and it might give you a clue as to what the greater market is doing. Speaking of the greater market, top-down view, let's put the T1 on and see where the strength is. Gold miners, small caps, gold, transport, silver, biotech actually picked up on the end of the week. An ARC Innovation 12th, ranked 12th with a super strong Friday. And then bring up the rear, utilities, Bitcoin, the dollar, and commodities. That's interesting. Usually the dollar and commodities might be opposite. Let's take a look at the S&P 500. Let's see if I got this way I wanted to. Yep. So S&P 500, what a great run it's been off the March lows. I mean, what can you say? What a great run. Is it getting tired here? I mean, I would have thought it was getting tired up here and there was another leg up. But yeah, I think it is getting tired. And I like to see it break above the chandelier stop and that PSAR dot before I throw much more money. And I think it's still going to roll over, but it can go higher. And as I showed you on some of the other analysis. If I look at the Dow Jones Industrial, same picture, same area for the chandelier stop, and just look at how strong on the weekly it's been. If I look at the NASDAQ composite, different story, below the 50, just below the 50. Had a high close doji here, which is a bullish signal, still in a person sell signal. Again, I bet it goes higher, but I'd also would be remiss if I didn't call out the fact that it's got a lot of areas of potential resistance in here. So right now, as much as I like to say that it's been a strong market, but I mean, are we sort of in a box? And if we're in the box, we're in the lower part of the box, I think we're still sideways. And I could have extended this box all the way back months. Let's look at the Russell. Looks a lot like the NASDAQ with lots of areas of potential resistance. You got the 50 and the 17, you got the chandelier stop, and you got the PSAR dots. So you've got some work to do to do my premise that the market moves higher here for at least a short period of time. I like to look next at biotech and semiconductors. Biotech had an improvement on Friday. You know, I've been nibbling on the 200, but I don't get rewarded because it just doesn't go anywhere. The oncology meeting is coming up. Typically, a lot of biotechs will run into that meeting. It's the first weekend in June. So I might add to my, and buy some LABU. Look, we had a mobile breakout, and by the way, I'm remiss in not pointing out we had Eurekas, whether I calculated on the NASDAQ or on the NYSE, that showed strength coming to the market on Friday, and you could see the relative strength has gotten positive, more or less negative as the biotechs have traded sideways. I think this one looks, frankly, promising. I'd be playing LABU because I have non-disclosures on a lot of those oncology companies, so I can't buy the individuals. If I look at Philadelphia Semiconductors, these have been weak, and you could see what happens as you trade down. You start having a chandelier stop trailing you. So again, just like the Russell and to some extent the NASDAQ, there's a lot of work semis have to do, so that's clearly not the strength. How about the IBD 50 fund? They had a good day on Friday, but still below the major moving averages. If I look at FANGs, I showed you they'd pull down to the 200 in the extended FANG, the Canaries, but the traditional FANG stocks are just languishing below the 50, not doing much. If I look at some of the ARCs, boy, Kathy Wood's taking on the chin here. Still between the 50 and the 200 on robots. FinTech below the 200, Genomic below the 200, Innovative below the 200, Israel just took the 200, Next Generation Internet below the 200, Space, too early to say anything. And then lastly, Bitcoin sold off as well. I know that because my son calls me, and he vacillates like a lot of newbies do between am I a trader or am I an investor? And when you start vacillating and changing that because of market conditions, it never ends well. Dollar trading down. Tried, you can see on the weekly, it tried to go up, but it came right back down. That's got to be considered bearish. The VIX, we're not even going to show you this because the way somebody reverse splits, it looks like nothing. Gold, if the dollar's weak, is gold rallying? It is. Still got to get above the 200, and that has been a challenge. So we'll see what happens there. Silver. Definitely stronger above the 8-day, the 17, the 50, and the 200. I own some, I think, ACQ, a leveraged ETF, and I own one small silver stock. And then miners, where Newmont is leading the way, better than gold, broke out above their 200. At some point, I expect these things to be stronger. As you can see, when you're just breaking above your 200, you don't really meet the definition of strength. If I go down to number 7, industry groups, hit warehouse, I've got 174. If I look at 2-day up, I'm going to see a big number, 96, because those last 2 days have been incredibly strong. If I go 2-day down, you probably won't see much at all, and we have 0. A little bit more intermediate, 5-day down, I got 26, and 5-day up, I have 72. So the move has been short-term, and these are the leading groups. Force up, raw. Let's look at the top few groups. Renewable energy. I usually only go below, up to the index. So here's Plug Power. It's in a downtrend. How many times have I told you about this pattern? I mean, this thing's done it multiple times. Here, 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 here. Never ends well. Here. Well, it's done it again. Now, is it getting ready to run? Popped on the end of the week. It had a pocket pivot, a kahuna, and a John person buy. I don't play this stock, but it looks interesting. Now, if it got above 30, it'd probably become real interesting. Then you get the index, and then you see a lot of high flyers from last year. Over here on the weekly, you can see last year, and here is Solar Edge, not now. Enphase, not yet. Fuel Cell, not yet. Sunrun, not yet. DACO, a little better, but not yet. First Solar, not yet. Ballard Power, not yet. Sun Power, these are all in downtrend. So why did this make it to the top of the list? Because they have lots of up days, green boxes, and big volume on these stocks. So interesting group, I'm not jumping. Entertainment facilities, well, the Reddit kids must be happy. Somebody showed a picture of a expensive sport car with a license plate, thanks AMC. You know, theaters are back, maybe with some revenue. They'll start to go up again. Huge volume stock. It's a Reddit play. I don't like how it ended the week. 2 days it tried to break out, get to 14, and both days it failed. You know, this stock is not being powered by traditional fundamentals or technicals. It is a bunch of new traders who are buying and not selling and trying to force the stock higher. Interesting approach. If brokers did such a thing, there'd be insider trading and they'd get in all kinds of trouble. Live Nation, live events coming back, broke above the 50. So you have a mobile breakout from a squeeze. You have a John person buy for several days. You have a pocket pivot, rather. The Eurekas are the market, 2 kahunas in a row. That's an interesting looking chart to me. You could argue big run up on the weekly and a flag, and if it trades up, it'll break out of the flag. Its revenue died up, but I guess as people are starting to buy tickets again, companies like this are becoming compelling. The fact that you can't really see the relative strength there because it's in yellow suggests it's between 60 and 80. So it's not red, which is good. Then we get to the index and I skip. Now, wouldn't you like to buy this stock? Run up, sideways, run around the 50, mobile breakout from a squeeze, pocket pivot, multiple kahunas. This is the index for entertainment facilities. So maybe it's something that we should be looking at. E-commerce discretionary. Here's my Amazon. It was down 2% on the week, up 1.9% on Sunday, on Friday. So remember my box? Well, it's still in the box, and it's been chopping since for a year. Well, almost a year. And until it convincingly leaves the box and stays out there, I'm probably going to maintain my puts because I don't want to watch it do this again. 2,000 down to 1,300. Burn me once, it's fine. So now, whenever it has a pop after earnings, which is what it did right here, I sell puts when the market opens the next day, and buy puts when the market opens, and I usually do okay because it seems to fall every time after it's popped. So at best case, it's sideways forever. I'm not sure I'd be chasing it until it defines where it's going. Farfetch, broken down. Jumia, African, Amazon, I guess, broken down. Maybe it's a place to buy. You got your Eureka in the markets. You have a Kahuna new person buy. I have a hard time buying downtrends. Now look at this huge hammer on the weekly. Maybe. I just think it's still high risk. Netflix broke down below the 200. We'll skip it. That was it for e-commerce. Semiconductor devices, what are they doing up here? Well, you got a lot of stocks like NVIDIA that were up 4% on Friday and traded 6 million. What gives you force? Today's price minus yesterday's price times volume plotted a 2-day exponential moving average, and that's how I rank these. Sort of a momentum ranker. How do you get high 2-day force? Either a big move or a lot of volume. These have both. So NVIDIA pulling down to the 50 for support. If I had to be a buyer or seller, I'd be a buyer here. But it's a high risk market and its earnings are coming out in 2 weeks. So I just be aware of that. Do I think it goes higher or lower? I bet it goes higher, but earnings are coming out in 2 weeks. Micron, no. Semi-LEDs, too volatile. Intel, I don't buy down here. This is the penalty box, but that's a high close doji on the weekly, on the daily rather, and could be a reversal candle off the 200. Not my kind of stock. Negative earnings per share growth and in a downtrend. Qualcomm, no. AMD, what a disappointment. It's falling below its moving averages. I wouldn't be touching it here. And look at the relative strength ring. You know, this was a great stock last year. It is not a great stock this year. Relative strength rank of 47. Broadcom, well, more interesting because you've got, I won't call it a base, but you got 4 days here, a higher low, higher high, new person buy signal. Still got to get above the 17 and the 50. I would probably be watching it, but not that excited and not chasing it. TI got back above the 50. It does have earnings per share growth. All right. Auto index. Tesla, I think Tesla is, it's either at a great bounce point or it's in the midst of breaking down and giving us several hundred points to the downside. Now that you have Lucid, you have NEO, you have Fisker, oh yeah, you got GM, you got Ford, you got Hyundai, you got Audi. Everybody has an electric car. I had a Tesla X. I loved it. It was not nice inside. It was very Spartan inside. I like luxury cars. It drove okay. I love the idea to not put gas on it. I bought my son a Tesla Model 3, and he hates it. My neighbor had a Tesla Model S. He got it in a wreck, and it'll be months before they have parts to actually fix it. How is this stock going to maintain the Elon Musk premium multiple of 589 when they have competition? And I bought another, I buy a lot of cars, and I bought another car this weekend because I wanted an SUV to help me move some of the stuff between my new house down here and my old house. Yes, a crazy reason to buy a car. And I looked at a lot of dealerships. I think Tesla's got a lot of competition coming. I'm not sure how you warrant this, but that's just my opinion, and Kathy Wood might feel otherwise. NIO breaking down. Ford Motor, I have some of this. It really hasn't done much since I bought it. It's got to get above the 50-day moving average before it gets interesting. GM, same thing. And why are these making my list? They're making the list because they have volume and they were up. Right? That's how you get to be on the winners list. I'm not finding a lot of great stocks. I'll show you one. Facebook. You know, it's kind of ugly on the daily. Let me make it less ugly. I'll squeeze it up. Pull back to the 17, had a new person buy. A kahuna. Weekly, it had a big hammer signal. I mean, Facebook looks like it's going higher. The safe move would be to wait till it takes out a chandelier. I probably would not, just because that's a long ways away. It's still got earnings. Alphabet, I own some of this, pulled back to the 50 and bounced. Baidu, bottom fishing on the 200. I read somewhere that Chinese technology are overbought, or oversold rather. This might be one of them. Snapchat, not into that. So I typically go down the top 10. We're going to look here at, probably look at biotech, and then I'm going to switch to my buy watch list. So I'm not a giant fan of Moderna, and I've made more money shorting it than being long, but it's got a buy signal, person buy off the 50. It's got a kahuna. I heard things about it beyond vaccines, at least for COVID. There's talk that its mRNA technology might be helpful in other diseases, maybe even in cancer. And so I worry about a stock in a company who has a market cap of 65 billion, which is a big market cap for a one product pony in a disease that could just disappear. That said, it's at a nice buy point. Moderna. Curis is a small biotech. They had a good story come out for the oncology meetings. It's got a relative strength of 99, which is beautiful. Stocks that pop on news going into these meetings have a tendency to run, especially into the meeting. It's not on its income. It's got millions, not billions of revenue. But that's an interesting looking chart. I'll look more into that for myself. Novavax delays, looks horrible, and then you get to the index. So, you know, I looked through the top 7, and I don't think I found 5 stocks for you to go out and buy. Maybe I did 5. So I did find a bunch that looked interesting. So here's my buy watch list for the week. And just to review, these are not buy or sell recommendations. These are stocks whose chart patterns intrigued me enough that I actually put them into a list. Now let's change this to scorecard and let me adjust by industry group. This is a back to work list. You've got airlines and aircraft parts. You've got auto parts. Boy, auto dealers are crazy. So let me give you a suggestion. If you're buying a car and the dealer's sticking a $5,000 or $10,000 or $20,000 premium on it because of market forces, find another dealer. I hate to tell you how much I spent at the Bentley and Rolls dealer this year. And the same dealer, I wanted an Audi SQ8, which is somewhat of a limited availability sports SUV. And they wanted to put $25,000 on it. And this is a dealer that I've spent over $1 million with in the last 5 years. I called up a dealer a couple towns over, and they delivered me the same car with no upcharge. So it's crazy when a dealer does that, but they're all doing it down here. Exploration and production, Oil stocks look good. Look at the earnings out. The next couple of quarters are incredible. Integrated oils looked interesting. Signet Jewelries continues to look good. They'll benefit from retail opening up. Midstream oil and gas, I'm not sure how much of their pop was related to the Colonial Pipeline problem. REITs, especially leisure and shopping center REITs, looked interesting. Specialty apparel looked good, and steel looks good, and there's sporting goods. I look at this and I very much see a back to work type of a story here. Now, just so I'm perfectly clear, I'm not buying 73 stocks on Monday. And I hope you're not too. And what I am doing is I'm taking this list and I'm going to stick it into my sonar, which is a radar screen in TradeStation. And I'm going to look for, during the day, when I turn this back to 8K or 5K rather, it'll look a lot better. I'm going to look for signals popping up here. On another monitor, I'll have the John Person signals with a different instance of TradeStation because I have too many symbols I'm watching. In Thinkorswim, I'll do the same thing where I've got my indicator columns here and I'm able to look at an entire list. Why does this matter? Because I'm going to look for signals occurring, especially this market. This one here is a short-term buy-sell, and you can see most of my buy list triggered a short-term buy signal on Friday. Let me call out one or two that I liked a lot, and then I'm going to say goodbye. Again, these are not to be considered a buy recommendation. They are a story I'm telling of how I look at things. So, I was just thinking about what I wanted to show you, and now I forgot which ones. Let me find it here. Amdocs. So, Amdocs is IT services, customer care, billing, order management systems. Okay. All right, so it's an IT. I'm not really that impressed with the earnings per share growth. But I really love the chart pattern. So I'd want to go back here. So they must have had an earnings miss back here in April. Their next earnings are in August, okay, and they sold off. But they just retook the 50. Look at the improvement in market catcher relative strength while the stock went nowhere. 2 kahunas in a row and a mobile breakout from a squeeze. I thought this one looked very interesting. Avantor, I think this is a healthcare medical device. I love buying stocks off of free parking. Pull back to the 50 and a nice uptrend, 20 up to 35, 34. I've got a new person buy, a pocket pivot, kahuna, and a mobile breakout coming off of the 50. That's where and how I like to buy things. Gaming and leisure. Coming up off the 50 here, pays a 4% dividend. A lot of nice looking stocks. I started with travel and leisure. Let me finish it. Uptrend, sideways move, above its moving averages, a new mobile breakout from a squeeze, a person buy, a pocket pivot, and a kahuna with eurekas in the market, which are sort of the follow-through day bullish signal in HGSI vocabulary, and that looks interesting as well. I break these down into various categories. I do not have a scan that tells me which are, well, I have scans for pullbacks and an uptrend, but this list is hand curated. But I do break my buy watch list down into a number of subtypes, and I can tell you that pullbacks ready to run, I had quite a few, and this is kind of where I make most of my money. So typically, and let's look at Nordstrom. Let's talk about this one with the shopper and the family this evening, my wife. I buy big things, cars, audio equipment, and computers. And I buy houses. She buys everything else. I love this pattern. Move up, sideways move, basing since January. So a 4-month base. And it's a wide range, 36 to 41. And a breakout on Friday, mobile breakout from a squeeze. Weekly bongo is green. New John person buy signal, pocket pivot kahuna. I like this one a lot based upon the pattern. And the beauty of something like this is probably going to look at that box. And if it breaks out of that box, which looks like 41-ish, I would probably go after it. Where did it close? It closed at 42, 49. So the box is, that's interesting. It doesn't look like 42. So it has, if it trades above the close, I'd probably take it. And I'm going to look at the lowest of the last 4 bars, which is probably this one, when the low was what? 35.82. That's kind of where my first stop would be. Since that's quite a big difference, I might move my stop up closer to the 50. Tighter stop, more risk, but less risk of getting hurt, more risk of being stopped out. Those are some of the stocks that I liked. I hope you have a great week. I know these things sound like a monotone. I don't know how to get excited. I do these at 11 o'clock at night because I got too much going on. Speaking of that, I am moving houses later in the month. I will be packing a lot of the stuff that I don't want the movers to play with. And I'm not sure I'm going to do this over the next 2 weeks. So if not, I'll catch you after ASCO in June. Have a great couple of weeks. Have a great Memorial Day. Get vaccinated. That's the doctor speaking. We'll see you soon. Bye, everybody.